Hey, what's going on, guys? This is Terrence Ray. I'm back at you with another weekend stock market update. This is video where I get you guys ready for what I think is going to happen in the week ahead. Of course, no one knows for sure, but I think my analysis is second to none. So without further ado, let's get to it. This week coming up, the expected move for the SPX is going to be at $88.81 currently, roughly $89, which is a pretty good move. I think the week before it was like over 100, and we seen every bit of that, last week, like from it opening up Monday, down, excuse me, over 100 points, and then rallying basically from Monday, rallying the rest of the week, and then on Friday it sold off right before the close. We have this right here, like this big red candle. Now, a couple things with that. Whenever I see a big move like that from here to here, a lot of times I throw like a fib retracement on and to see what it looks like um, the next day or rallying from that. So basically, and now I'm dropping down to an hourly. I want to see what happens Monday. I don't think we'll get a whole lot Monday. And let me show you why. All right. Here is the economic data for next week. And you may not be able to see it, but I'll read out. On Monday, we have no news. On Tuesday, Fed Chair Jerome Powell is giving a testimony. And um, he's probably going to talk about interest rates and this, that, and the third. That will probably move the markets depending on what he says. And so we may get so Monday, we could get like maybe a inside day, right? Maybe something where the basically when I say inside day, maybe something like whatever we get on Monday may be inside of this red candle, possibly. Possibly. I could be wrong, but he's not gonna. So Monday there's no news, and Tuesday we're gonna get the fireworks. When he talks, it'll probably move the markets, whichever direction. Wednesday we got core inflation, month over month, core inflation rate year over year. We're gonna get movement on Wednesday. Inflation rate, inflation rate. We're gonna get so it says Fed Chair Powell testimony again on Wednesday. So I don't know if he's speaking. I guess according to this, he's speaking twice, which seems odd. Um, but and then we got PPI on Thursday. So we got enough news to move the market. That's why I said $89 is pretty good. It's a pretty good movement for the week. So, but it could just be like this one, just back and forth, possibly. Now, how am I playing that? That's the one thing that I think that about my channel is a little bit different from the rest. I give you my analysis. Now let's talk about how I'm playing it. Generally, the SPX is a large underline or equity or whatever you want to call it index to trade. Takes up a lot of capital. So I generally would trade the S&P 500 by using the SPY. So now in the SPY, I do think overall, once we shake out all this news, I do believe that the market would go higher. Um, so, but while we're in this news cycle, we just getting a whole bunch of stuff just bouncing around. When the VIX popped like it did, you can see right here. I drew this Harami. I highlighted this Harami candlestick pattern. The market gapped up. I went in and sold an iron condor in the SPY. Let's look at it. Right now, it has 40 days, and you can see my positioning. I'm out here at the 12 delta, and I'm out here at the 15 delta on the put side. Now, initially, when I put the trade on, I was closer than that, but you can see how um, how the market in the past few days, how the expected move has shrunk, and volatility has come in some as the VIX has come down. So right now, it's still showing I have a 66% probability of profit. and that's where I'm sitting at right here. So I'm outside of the expected move. I'll hold that position. It's just up about $23 right now, as you can see. Tesla, I also have a put spread on in Tesla. When Tesla dropped, I kind of like sold into it, basically, as it's coming down. And then we got this red candlestick here. I sold a put spread into it, or I want to buy low. Selling put spreads or buying call spreads are ways to what they say, buy the dip. Generally when people say buy the dip, they thinking about coming in and buying stocks when they're low, which is real capital intensive. Eats up a lot of capital to come in here and buy 100 shares of Tesla or 10 shares of Tesla for that matter, whatever. So I just sold a put spread right here, and I'm down on the position right now, but my short strike I think is down here at 345. So we'll see what happens next week. Any type of little rally up into here, I'll be able to close the trade out for a profit. I already closed out. I had a put that I had sold on Alcoa. And Alcoa, I actually think will still continue to go higher. I do have some Fibonacci levels on it, but I went on ahead and took profit. So you can see right here on Friday, this is an intraday chart. So it gapped up and then it took this level out and went here. And I went on ahead and closed my spread, my put out, my short put. Right here, you can see I closed it out for a $47 profit. Now, if Alcoa continues to come down a little bit, I may jump right back in this and sell another put. It still has an IV rank of 42. So it makes selling options still viable in here. And the options right around the in the money or at the money are still juicy. So if I get any pullback on Monday or Tuesday, I'll probably come in here and sell a put right here at the 35 strike, the 39 delta. So I have this on my watch list to continue looking at. Another one that I have on my watch stocks to watch is Meta. Now, Meta, for another reason why I have it on the stocks to watch list, is not because it's doing bad. It's because it's just killing it to the upside. So you're looking at this and you see this just jumping up, right? We had this little range right here and it jumped up higher and it's continuing to go higher. You get a little pattern, then break higher, pattern, break higher, pattern, break higher. At some point, I'm just figuring that we got to get something for it to come down, right? I don't know that for sure. I'm being honest with you. I'm just saying when I see a stock continue to just go up, then the way I think about it, I start looking for a reason to get short. So it's overbought on the RSI. It's overbought on my stochastic. Now this is as a trade. When I'm looking at like shorting this, I'm not looking at shorting it because I think it's a bad stock. I'm just basically looking at the technical analysis at like, hey, just like here, you see it right here, and you got a little down move. That's enough right there to get you paid. I don't need something big. This will get you paid. This right here will get you paid. So something like this, I would not short stop. I wouldn't even sell a call or call spread. This is something where because it has a low IV rank. So this is something where I would do something like a put spread. Basically coming in here, do it one in the money, buy that, and then sell one out of the money right here, and then take a bet on it going to the downside right there. Now, right now, this isn't pricing properly because this is a Sunday when I'm doing this video and the markets aren't open. This market, when it opens up, the bid ask spread will be a little tighter down here. And more than likely, I'll be paying about 250 for a $5 wide box. Half of the box would be 250. I don't want to spend no more than 250, maybe 255. I may even spend 260, but that's about it. Right. And that's basically a 50-50 shot of it going to the downside. And like I said, I don't need a big move, maybe something from here down into about 670, something like that. That'll get me paid. And if I'm buying it for 250, I'm looking to make 125 out of it, and I'm out of the trade. On to the next one, right? So I'll be watching Meta coming into the week. Like I said, I don't know if you've been following the channel, I did buy a call spread in the video, already out of it. I took it off because it wasn't, I didn't get as much as I wanted. I paid 127, excuse me, 97 for it. I wanted to make at least about 50 bucks. But it wasn't, it didn't move like I wanted it to move. And so that's the thing with buying call spreads. Sometimes they don't move. I probably should have sold the put spread. I would have made more. But I just closed it out. I was like, look, I'll just take the money because I think at some point we'll get a pullback into here. And I ain't want to hold it for a long time. Took the little 30 bucks, ran out of it. Right. Um, what else did I have on? I took off, I think I took off 2 or 3 trades. But all in all, guys, so far in this account, like I said, I wanted to, it's like my YouTube, options trading account, and I try to be transparent with it. So far, we are up 614 bucks in it. Um, for the first week of February. It's about 5 weeks of trading. We up 614. So we're just gonna try to keep trucking through. Just trying to actively show you guys how I manage, how I would or I am managing this portfolio, not taking huge risk, taking small trades. This can be done. This is a relatively small account. Um, you got guys out there with $100,000 accounts, $1 million accounts, slinging them. You know, the trades that I'm doing, you can do what anybody can do. Basically, I would say maybe we need to start with at least 2,500, and that's that. Because I'm not doing even the naked put that I sold in, what was that, Alcoa. If I was to sell this put Monday in Alcoa, the buying power is 616. So it will margin your account $616 to do that, sell that put. So you don't need to have. I'm not now. Of course, if you now Tesla, you wouldn't be able to sell a naked put in there. It would be something like a naked put in Tesla, which is why I got the put spread. It would cost almost $14,000. But when you do it the way I did it, sell this one, buy this one, do a put spread, only margin you $303, right? So that's the benefit of spreading it off. Excuse me. So with that being said, guys, Monday may get a little bit, may drift down, may get some side to side action. We'll see. With the market selling off like it did going into the close, we'll see if it opens up tonight in the futures market. If it opens up gap down, we'll see. Once again, I'm looking at a retracement in Alcoa. I want to see Alcoa come down a little bit further. I jump back in. Meta, I'm looking at putting a put spread on. I'll push that out, and if I do the Meta trade, I'll push that out and I'll put it in the community tab. So make sure you're subscribed to the channel so you can see that. Those two stocks and NVDA, I will also be looking at. I want to see NVIDIA pull back a little bit into here, and then I may look to sell a put spread there. The only thing with NVIDIA, we got earnings coming up after the bell on February 26th. So anything that I do, that means I would have to trade through earnings. So that may give me pause, but we'll see. Hey guys, hopefully you got something out of this video. Hit the like button, hit the subscribe button. And if you like the platform, I think Tasty Trade is the best platform to trade on. If you sign up, use my link in the show notes. And if you sign up and put a certain amount of money in the account, they will give me something off of that. I do as like a little affiliate link that I have. But like I said, I actually have my money in here and I'm trading my money myself. Um, I'm none of the trades that I'm doing. I'm not a registered advisor or anything like that. I just like to be transparent. No, I'm not selling no classes, no $1,000 classes or nothing like that. Just coming on here sharing what I'm doing. That being said, guys, support the channel, please. I'm out. Peace.